Welcome back to the quarterly call. All content is for informational purposes and is not investment advice. Please consult with an investment professional. All right, with that out of the way, let's unpack something really pivotal in the tech world today. We're zeroing in on ASML. They're a company that doesn't just build machines, they're really building the foundation for, well, all modern computing. And their latest quarterly results, Q2 2025, they offer this incredible snapshot, really, into the heartbeat of the semiconductor industry. So this is your chance to quickly get up to speed on some crucial trends shaping our digital future.
It really is. What's fascinating about ASML, I think, is their unique spot in the ecosystem. They specialize in advanced lithography. It's the art of printing unbelievably complex patterns onto silicon. Just imagine trying to etch, I don't know, a city map onto something smaller than a tiny grain of sand. That's sort of the scale we're talking about. And this tech, it's not just a component. It's the absolute core enabler for those tiny, powerful chips. You find them everywhere, right? Smartphones, AI servers. So understanding how ASML is doing really gives us a window into where global tech is actually heading.
That's such a crucial point. So, okay, building on that, what specific bits of their Q2 performance really shone a light on this unique position? We've got a fair bit to cover from their, financial health to the really cutting edge technology. We'll definitely look at how they hit their net sales guidance and that important split between their different systems, the EUV, extreme ultraviolet, and the others. And then, yeah, we absolutely have to dig into their gross margin. It was pretty impressive. How did they manage that? And, well, you can't top chips these days without mentioning artificial intelligence, right? So we'll explore how AI is acting as this central growth engine for both logic and memory chips, which leads us straight into the progress they're making with lithography itself, specifically low NA, and of course the much talked about high NA EUV systems, and what that means for customers, how quickly and efficiently they can actually make these chips.
But it's not just the numbers and the tech specs, is it? We also need to look at the complex web of macroeconomics and geopolitics, especially tariffs. Those are definitely throwing some uncertainty into the mix for the 2026 outlook, even though, the underlying demand for chips seems incredibly strong still. It's a really dynamic picture out there.
Right. And finally, we'll take a step back, consider ASML's longer-term view, their vision for the whole semiconductor market, and their own pretty ambitious growth path out towards 2030. So stick with us. There are some really key insights coming up that should give you a solid handle on all these complex pieces. Okay, so let's kick off with those Q2 financials then. ASML reported total net sales of 7.7 billion. That hit the upper end of their guidance. Now, when you look at that top line, especially with 5.6 billion coming from system sales, what's the big takeaway for you? Does that split? 2.7 billion from EUV and 2.9 billion from non-EUV. Tell us something maybe unexpected about current priorities.
Well, what really jumps out is the clear signal about where the industry is putting its money right now. Logic chips, they're basically the brains in devices. In AI, they made up, was it 69% of those system sales, and memory taking the other 31%. And crucially, their installed base management sales. That's all the services, the upgrades, parts for machines already out there. Those came in strong too, actually above guidance at 2.1 billion, which points to, a very active fleet of machines already installed globally.
Sounds like a pretty solid quarter all around then. And that gross margin you mentioned, it was particularly impressive, wasn't it? 53.7%, also above guidance. What was driving that strength?
It really was a strong margin, yep. It boiled down to a few key things, really. There was an uptick in their upgrade business, so customers investing in making their existing machines even better. Plus, they had some one-off items that resulted in lower costs. And even the impact from tariffs was lower than they expected this quarter. The one thing that slightly pulled it the other way, and it's worth noting, was the dilutive effect from recognizing revenue on their very first high-NA system. It's a hugely advanced, super expensive machine. So recognizing that first one, it just mathematically impacted the margin percentage slightly, even though technologically it's a massive leap forward.
That's a fascinating detail, yeah. The sort of quiet arrival of high NA on the balance sheet. Looking big picture, net income was 2.3 billion, nearly 30% of sales, EPS of 5.900. And their order book, still huge at around 33 billion, though it did see an adjustment. Can you maybe elaborate on that? That 1.4 billion adjustment in Q2 tied to past export controls.
Sure. That 1.4 billion adjustment, it was mainly related to their DUV systems, deep ultraviolet, and some application business, mostly impacting China. It basically reflects customers finalizing decisions based on those export restrictions that came into effect back in 2024. But look, even with that adjustment, the sheer size of the remaining backlog, $33 billion, it just underlines that the core demand for ASML's tech is still very, very strong.
Right. And speaking of demand, what is really powering this continued momentum for ASML? Is it still that kind of insatiable appetite from AI?
Oh, absolutely. When we talk about the real driver, AI is front and center. No question. It's the key growth engine right now. For both logic and memory, ASML expects logic system revenue to actually increase in 2025 compared to 2024. Customers just keep adding capacity on those leading-edge nodes, the smallest, most advanced chip designs.
And for memory, it's a similar story, I guess. AI driving demand for things like HBM, high bandwidth memory.
Spot on. Memory system revenue is expected to stay strong in 2025, largely because customers are moving to their next manufacturing nodes to support the latest HBM and DDR5 products, which are just critical for AI workloads. That demand from AI for high bandwidth, high performance memory, it's a huge factor here.
Okay, so ASML is seeing their advanced customers planning to add about 30% more EUV capacity in 2025 versus 2024. But what's interesting is because their newer low-NA systems, the
Right.
NXE.3800E, are more productive,
Yeah.
they can handle this increase with roughly the same number of systems as last year, but obviously with higher selling prices and better margins. That higher productivity, 220 wafers per hour, that's a real game changer for efficiency, isn't it?
It absolutely is.
Yeah.
And this ties directly into the incredible tech progress they're making. On the low NA side, they've made really strong strides, completed a lot of field upgrades. And this lets customers replace what used to be a really complex multi-step process. Imagine carefully carving lines multiple times just to get one tiny feature right. They can replace that with a single super precise EUV exposure. Think of it like going from, chiseling something intricate to using a laser etcher in one go. That single exposure means lower cost, faster production, and ultimately better chips.
And then there's high-NA EUV. That's the next big frontier. They're maturing that tech with their EXE.500B this quarter. And that one's designed for high-volume manufacturing. It can hit at least 175 wafers per hour, which is roughly a 60% productivity jump compared to the older EXE.5000. I mean, when you think about the precision needed here, literally printing features smaller than a virus, does it just blow your mind sometimes how far this has all come?
It absolutely does.
Yeah.
Sometimes you think, what would chip designers from just, say, 10 or 15 years ago make of these machines? It would seem like pure science fiction. Stepping back a bit, these high-NA advances, they're all about enabling future customer roadmaps and lowering their costs by allowing them to move from, multi-patterning with low-NA EUV to just a single exposure with high-NA EUV. This basically increases the number of effective EUV layers you can use, really pushing the boundaries of what's possible in chip design.
Now, it's not all smooth sailing, as you mentioned earlier. ASML did highlight increasing uncertainties, macroeconomic factors, geopolitical stuff, particularly tariffs. Underlying demand is strong, they say, but these things are making customers cautious. Beyond just the direct costs, what does this complex interplay really mean for how customers make decisions? Can you paint a clearer picture of how these bigger forces translate into actual, delays or caution?
Yeah, it's a really intricate web. On the direct side, sure, tariffs could hit their system sales to the U.S. or affect imports for their U.S. manufacturing or even parts exports. But the indirect impact, that's much harder to pin down. It's about how tariffs might affect global GDP, overall market demand for everything, smartphones, cars, you name it. And this sort of broader economic and geopolitical fog, it's leading customers to just, hold off a bit on big capital spending decisions. They're basically saying, let's wait and see. Let's get more clarity before we commit billions to new equipment.
Yeah, and you see that caution reflected in their 2026 outlook, right? They still see strong AI-related demand for logic and memory and the positive impact from more EUV layers, but they're saying they just can't confirm growth for 2026 at this point. It really underlines how these huge global issues ripple right down through the whole tech ecosystem. It feels like a pause almost, waiting for those geopolitical clouds to part a bit.
Exactly. But looking longer term, ASML is still very optimistic. You have to remember that. They still expect the semiconductor market itself to stay strong, mainly driven by AI. Their vision, presented at their Capital Markets Day, looking out to 2030, they're projecting a revenue opportunity somewhere between $44 billion and $60 billion, with gross margins potentially between 56% and 60%. So that long-term view, it really underscores this fundamental belief in the continued growing need for ever more advanced lithography.
That's a huge potential range. It really speaks to how the end markets are expected to shift, doesn't it? More towards advanced logic, more advanced DRAM, which requires even more intensive use of these advanced litho systems. So that combination of their strong productivity roadmap on low NA EUV plus introducing high NA, that's going to be key, key for supporting cost reduction for customers and enabling whole new levels of chip complexity. Okay, so bringing it all together then. ASML's Q2 25, financially pretty strong, signaling good operational health. Net sales hit the high end, that healthy gross margin driven by upgrades. Smart cost management tells you they're executing well. System sales clearly skewed towards logic, showing where the big money is flowing right now, but memory is right there too, thanks to AI. And that big backlog, even with the adjustment, tells us demand isn't really vanishing. This is a company quite literally building the foundation for our AI future.
Yeah, and from a broader market view, it's just crystal clear. These tech leaps are fundamental to future compute power. It's not an exaggeration. AI is still the main engine, pushing demand for advanced logic and memory, which means more adoption of EUV layers. And those advancements, like the low-NA NXE.3800E hitting 220 wafers per hour, or the big productivity jump with a high-NA EXE.5200B at 175 wafers per hour, they are absolutely essential. Essential for enabling customer roadmaps, driving down technology costs, making more powerful, cheaper chips actually possible. If we connect this to the bigger picture, it's clear these technological leaps are fundamental.
And looking towards 2026, it's this fascinating blend, isn't it? Strong underlying demand, definitely fueled by AI. Yet it's tempered by these significant macro and geopolitical uncertainties, especially around tariffs. Customers are being cautious, maybe delaying some big spending decisions. But the key thing to grasp here, I think, is that this seems to be more about timing and needing clarity rather than some fundamental shift away from needing this technology.
Which really raises an important question, doesn't it? How will the industry keep navigating these complexities while still pushing the absolute boundaries of what's technologically possible? ASML's strategic importance here, their whole tech roadmap, including that long-term revenue view towards 2030, it's critical. This constant push for litho innovation, it isn't just about ASML's bottom line. It's essential for the entire industry's progress beyond the current nodes. It's what enables the next generation of computing for, well, everything from self-driving cars to the next wave of generative AI.
So, what does this all really mean for you listening? It's truly fascinating, I think, how one company's quarterly report can light up this deep interplay. Cutting edge tech, global economics, geopolitical currents, they're all tangled together. What might look like just abstract numbers on a page, they actually reflect these huge strategic decisions. Decisions that will shape everything from AI development to the gadgets we all use every single day. Think about how these ongoing debates around tariffs, around chip development, how they ultimately influence the actual pace of innovation for the next decade. It's quite something to consider. Thank you so much for tuning in to the Quarterly Call. For more episodes, please remember to rate and follow our show. Until next time, stay curious and stay informed.